And one, we are ready. All right. Hello, everyone. Hello, world. Welcome to another edition of Ingressive Capital's monthly market trends reports, where we share about the trends that we're seeing across our different markets in Africa. Fundraising activities, macroeconomic updates, inflation, GDP, all those different things. And today I have with me our Oga at the top. I have Maya herself presenting today. She will be sharing with us what we've been seeing across the different markets in the last month. Introduction about myself. My name is Tito. I work within the marketing team at Ingressive Capital. And yeah, I think this is not about me. So that's just a short intro about myself. So I'm going to pass the mic now to Maya, who will be running the show. I will hop off stage and so that she can take over.
Thank you so much, Tito. Very much appreciated. Hello, everyone. Thank you for joining what month is this? Okay, we're going over February. Yes, the February 2025 monthly market trends reports. The purpose of us doing this is to keep you apprised for all of the global investors, even all the entrepreneurs on the continent, of the global macroeconomic trends. Sometimes, as a tech entrepreneur on the continent, you can think that the global events that are happening don't really have anything to do with you and can't affect your business. But unfortunately, you have to consider and keep in mind and be tracking one more metric, one more data point to make sure that you are considering everything and you are staying the most prepared for the ups and downs of business building. That could be anything from global interest rates change and you are lending business and that affects the cost at which you are able to get the debt that you then provide to third parties. That could be global political crisis happens or geopolitics, wars, et cetera, and you are a logistics company and you can't move your products in or out, et cetera, et cetera, et cetera. So we're going to go over some of the key trends, what we think those things mean, and then also just generally what's happening across Africa. And so at the end, we will also take questions, and I look forward to going on this ride with you guys. So as far as the actual structure of this, so one, we're going to go over focus updates. Two, we're going to go over funding entries. Three, we're going to talk about hubs, the different hubs across Africa, what's really happening there. Four, we're going to be talking about really what the significance and what that means. And then we'll be talking about team expeditions. Lastly, curtain close. That will be a summary of how this can impact your business, how this can impact your investment fund, how this can impact the economy at large, and where we think new economic activity might be emerging. So now the macroeconomics on the continent. We'll go piece by piece. I'll go high level. This will also be shared after if you guys have any questions. All of our historical monthly market trends reports are available on our website, www.ingressivecapital.com. You can go there, check them out if you want to deep dive on any of this stuff. And then we're always available on social media, on email, etc. if you have specific questions about the significance. I'm here to help. So firstly, getting into things with Egypt, the last few years have been a little bit crazy. We've seen incredible amounts of inflation, some of the highest on the continent, as well as a devalued currency that we really didn't anticipate, especially with such strong ties with Egypt between the United States and the UAE and broader Middle East. It was surprising to us all. Things got a little bit crazy. They sold a number of state assets in the FMCG, in the hospitality, in the oil and gas space. Things have really begun to finally stabilize. And so what that means, the GDP at large, fortunately, we're still seeing meaningful growth. Last year grew by 3.5% year on year in Q3 2024 alone, up from 2.4% in Q2. So we're seeing, again, the pickup of speed, increased consumer confidence. We're seeing economic activity begin to grow after the stabilization, after the devaluation, business is picking back up. The expansion was also driven by improvements in production, exports, and capacity utilization across key sectors. We're seeing transportation, ICT, tourism, trade, agriculture, and construction. The GDP for 25 is expected to grow between 3.5 and 4%. Again, an uptick after, we had the crazy stagnation around COVID, significant growth up until 2020, 2022. Market really corrected from 2022 to 2023. Now we've stabilized, let go of some of that steam, and now we can pick up sustainable growth once again. We're seeing easing trade flows, of course, given all of the Israel-Palestine conflict, all that's happening there. We're seeing a lot of issues with the trade route. We're seeing a lot of ships being sabotaged, sunk, et cetera, et cetera. So a little bit of logistical issues moving products using one of the key shipping routes. But as that stabilizes, we should see this uptick as well. Also, the Egyptian pound remains steady, stabilizing about at 30 EGP per USD. And unemployment fortunately fell to 6.4% in Q4 2024 from 6.7% in Q3. The Central Bank of Egypt's policy remains unchanged. So deposits are at 27.25, lending is at 28.25. Though we may see inflation, or though we are now seeing inflation gradually declining due to increased interest rates. So they will probably stay high. I think also what is going to happen with the US Fed will also have global ripple effects. So we're just sort of pausing and waiting to see what happens after those conversations in the US as well, and how they will have global impact. As far as Ghana, another one of those that we saw a lot of instability as far as the currency, as far as them defaulting on their own loans. And fortunately, with the new administration, there is revitalized hope and confidence. This new administration is signaling very much pro-business environment, very much leaning on the comeback campaign, as well as making various initiatives to promote Ghana as a hub and of a center for business and commerce. Ghana's growth did slow, though, to 3.6% year on year from Q4 2024 compared to about 7.5% in Q3, which is surprising given all of the activity around Q3, Christmas time, et cetera. It was driven by early gains in industry and services, or at least seeing this continuing to develop. In Q4, services, which was we saw about 6.3% in the services sector, and agriculture at 2.9% were the main contributors to this growth, while industry sector barely grew at 0.2%. The CD has remained volatile, but generally stabilized now after the IMF debt restructuring initiatives. I think that given the stabilization now, the new administration, we can expect increased stability and even increased both tech investment. I know, at least from Ingressive Capital, part of our pause on investing in the Ghanaian ecosystem was to see what happened with the political and economic climate. And we have renewed confidence in the geography. So Ghana-based tech founders who are listening in, feel free to continue to send your decks. And also, I anticipate that there will be an increase in venture funding now that we have the post-election stability. In Kenya, Q3 2024, Kenya's GDP growth slowed to 4% year on year from 4.6% in Q2, bringing that to about 4.7%. It's down from 5.6% in 2023. So we're seeing tighter monetary policy, fiscal consolidation, and due to, I believe, a meaningful amount of this decrease in GDP came from the rioting, the sort of political unrest that we saw last year, which was a necessary evil. Of course, this had to happen to ensure that policies and regulation and government initiatives were aligned with the best interests of the populace. It seems that things have stabilized, agreements have been made. It seems that we will see positive light moving forward. Also, with high commercial lending rates, around 14% during 2024, that curtailed a lot of the credit activity in the private sector. Interestingly enough, we're seeing a lot of global interest in private credit. It seems to be sort of the trend of the day. And so we'll get more into that at a later time. The Kenyan shilling, fortunately, has been relatively stable against major other currencies, And inflation actually hit a multi-year low at 3% in December, which is materially different from Nigeria, our neighbor, who we'll come to, as well as Egypt, who we have just concluded on, but Nigeria will come to next. Encouragingly, as inflation remained low, the Central Bank of Kenya has pivoted to easing stance. So we will likely also see rates cut as this inflation remains low. Lower interest rates and expected higher public investment are set to stimulate demand. The Nairobi Securities Exchange also rallied in 2025, gaining about 14% in January alone, indicating returning investor optimism. We will see the global implications of what's happening in the Western world, as well as some of the global macroeconomic competition over the Kenyan market. We'll get into that later on. Kenya's growth is forecast to accelerate to about 5% in 2025, supported by recovery in credit growth, improved agricultural output, and ongoing ICT services sector expansion. Now, Nigeria. A lot has happened. Fortunately, this year, with Dangote Refinery up and running and a number of other competitors, we're seeing the price of fuel come down. It was about at 1,000% increase from recent years, which is insane. And obviously that led to incredible inflation across the board. The price of onions radically increasing, the price of meat, of chickens, etc. Food, services have all increased. Excuse me. Services and goods have all significantly increased due to the removal of the fuel subsidy, the explosive increase in cost of oil, as well as a number of the economic measures that were short-term, very, very painful, but long-term beneficial for the economy, as we're seeing in the, at minimum, expansion of refinery efforts in Nigeria. Now to go into the GDP. GDP growth in Nigeria has remained at about 3% year on year, slightly lower than the 3.5% pace earlier in the year. We're seeing the primary growth driving from oil production increase. And we're also seeing agriculture and industry growing a little bit more slowly as the year begins. The government's bold reforms in mid-2023, as I mentioned before, the removal of the fuel subsidies and also floating the naira, have improved the long-term fiscal outlook, but contributed to short-term inflation shock and contraction of consumer spend. We're going to see that more or less stabilize, especially as fuel prices, as I mentioned, come down. Hopefully, that translated to the cost of goods and services for the average consumer. So although this figure is much lower than the December 34.8%, it does not signify an actual drop in prices. So headline inflation changed to 24.5% from 34.8% it was prior. But we have hope that things will continue to stabilize once again as fuel prices continue to decrease. The Central Bank of Nigeria has held its monetary policy rate at 27.5 during its January and February meetings after a cumulative 875 basis point tightening in 2024. With the rebased inflation showing lower rates, the MPC is cautiously optimistic and may consider rate cuts later in 2025 if inflation convincingly trends down. So for all of you entrepreneurs out there, interest rates are increased when inflation radically increased. Interest rates can decrease if inflation significantly lowers. We can go into that at the end if anyone has any sort of economics questions of how or why that works. In 2023, the official unemployment was at 4.4% in Q2 2024, but this belief belies widespread unemployment in the informal economy. Looking ahead, if the government sustains its reform momentum, Nigeria could see GDP growth accelerate to 5% plus in 2025. And also, what we're already seeing as a key recipient and likely the top recipient of venture capital dollars in 2025. My money is on Nigeria. However, if reforms stall or external conditions worsen, we may see it drop to around 3%, which would be a slight contraction from the prior year. Now, getting into Morocco, which is our smallest country where we are most active. However, we see it as a key driver in technology growth, and we also see it as a hub of African technologies being exported to Western worlds, as it is right next to Spain and a very close ally to France. We've seen historically low inflation rate, an incredibly stable currency, and a generally stable market. However, interestingly enough, Morocco has one of the lowest rates of financial inclusion, so of digital money, of fintech at large. However, one of the highest rates of mobile and internet penetration, almost about at 100%. Morocco's GDP grew by about 3% year on year in Q4 2024, which was down from 4.3 in Q3 as the post-drought recovery leveled off. 5.3% decline in agriculture activity in Q4 slowed overall growth, although non-agricultural sectors grew 3.7%. Notably, extractive industries performed well. Phosphate, rock, and output surged. As you all may know or may not know, Morocco is a key exporter of phosphate, which is used in fertilizers. It is also positioning itself as a key hub for not only the batteries for electric vehicles, but electric vehicles at large to be produced. So if you're thinking of ways that may impact your business, we can go into it again at the end. So for 2024 as a whole, Morocco's economy expanded 3.2%, and this is projected to grow to 3.6% in 2025, driven by generally rebounding agriculture, continued infrastructure investment, and recovery from the tourism. As you know, there was earthquakes, a few other environmental issues that led to decreased in tourism and economic slowdown in Morocco. We've seen them rebound and rebuild incredibly well. The annual CPI reached 2.0% in January, up from 0.7% in December 2024, as food prices rebounded. This is still below historical averages. We also see the major bank in Ghana cut its rates to 2.5% in December 2024 to support growth and kept the rates unchanged in early 2025. We anticipate that they will continue to remain stable as the year continues. And Morocco's unemployment rate was about at 13.3% in Q4 2024, an improvement from 13.6% in Q3, but as an overall basis of unemployment edged up due to drought-related job losses in rural areas, and that's correlated with the decrease in agricultural production that we saw at the end of the year. The government's continued rollout of support and investment programs is expected to create jobs and support overall consumption. And I would say, as far as the countries where we are actively investing, Egypt has been at the top historically, as far as government initiatives to promote technology, to promote venture capital industry. And we see Morocco coming up as a major competitor. As far as I would be surprised if they did not come to lead the continent in ease of doing business, in creating a supportive environment for technology, entrepreneurship, and domestic manufacturing and innovation. They're doing a strong job, and the royal family has its eyes on the prize as far as making Morocco a tech and manufacturing hub for Africa. Inflation in Kenya rose to 3.5% in February 2025 from 3.3% in December. Inflation in Nigeria dropped sharply to 24.5%. which was over 10% higher last year. Inflation in Egypt edged to 24%. It's better than years past, but still incredibly high. Inflation in Ghana slowed to 23%, and inflation in Morocco rose to 2.0%. They are historically between about 1% and 2%. And having gone over the interest rates, so we're seeing in Nigeria, Ghana, and Egypt in the mid to higher 20s, Kenya about 10%, pretty average for them, and the Moroccan bank is generally around 2.5%. And unemployment, as we discussed. Now, funding entries. Despite global venture capital headwinds, February 2025 saw vibrant startup investment activity in Africa, bringing in January's momentum. Key highlights include major fintech funding rounds, an uptick in clean energy and AI investments, and continued dominance of Nigeria, Egypt, and South Africa. Now, before I get into the actual numbers, I just want to ensure that we're all aware of the global macroeconomic trends that are actually leading and contributing to this from my perspective. So investors have, over the last few years, I'd say at least 2 years, there's been a contraction in the amount of global venture capital dollars being deployed. And investors have moved into safer and higher yield industries or industries that are assets that now have higher yield than historical. So treasury bills, just fixed income and cash equivalents generally. And now we are seeing, with the reduced confidence in the USD and the US dollar, and with a lot of the confusion, concern around tariffs in the US, around global geopolitics, around the relations between the US and the EU, even now, as well as US and Russia, US and China, the Russian-Ukraine conflict, the Israeli-Palestinian conflict. We are seeing investors who formerly said, hey, I have 100% conviction around the stability of these Western currencies, as well as these Western fixed income assets. I'm just going to park my money here. Rates have increased. We're good to go. Now saying, I don't have as much confidence as I did before. And now I'm going to once again look to private equities, especially as public equities and the public markets seriously come down due to the recent decisions made by President Trump. So what that means for you in practice this year, and if for the potential limited partners that we have, or for the general investors we have on the call, please feel free to share your thoughts in the comments. But for entrepreneurs, what that means for you is likely there will be an increase in global investment looking towards Africa as our yields stay high, as our economies seem to be more stable, and at least our political environment seem to be more stable than the Western world. Increasingly, investors are thinking of, at minimum, more global diversification. In Egypt, 35.7 million has been raised in February 2025, mainly fintech, e-commerce, and manufacturing tech. Seems on brand. These are generally the highest sectors to receive investment in Egypt. Khazna has received 16 million in pre-Series B funding, fueling their expansion to Saudi. As we know, most Egyptian companies begin to, or once they've sort of stabilized themselves in the Egyptian market, always have eyes for broader Middle East. Tajir has secured 6.75 million in funding, led by Norskin, 4DX, and Beko Capital. Simplex Manufacturing Tech has raised 13.5 million to build a new factory in Saudi. It is again on brand with the fintech and manufacturing developments. Egypt's tech ecosystem continues to attract sizable investments, particularly in fintech and e-commerce. Now, Ghana. And the last thing I want to touch on what's happening in the Egyptian market, and we'll go case by case, is also looking at something very notable happened. Fawry. It's one of the first fintech success stories that happened in Egypt, is now beginning to both acquire and invest in early stage startups that it sees as being strategic. So we're seeing sort of Google initiatives. You know how Google has Google Ventures, as well as a very robust M&A or corporate development department. So we are seeing various African companies, and we'll come to Moneypoint in Nigeria, which is acquiring assets across the continent, which is very much positioning itself to be able to acquire early stage assets, invest in early stage assets. We are seeing some of these African unicorns turn around and begin focusing on M&A as their market expansion strategy. Now, Ghana has raised 8 million in February 2025, and this is in the fintech space. Once again, historically, over the last year, we've seen a lot of volatility in the Ghanaian cedi. We have also seen political instability. We weren't exactly sure what was going to happen around the elections, and them defaulting on their own loans. And so that obviously led to increased investor insecurity when it came to the Ghanaian cedi, when it came to investing in the business climate at large. We saw a contraction in FDI, which makes a lot of sense, foreign direct investment. And now, as things begin to stabilize, as investors begin to regain confidence, we will see an uptick in the investments coming into the ecosystem. One of these most notable, Affinity Africa, a Ghanaian fintech that had been working on its license for a long time, closed its license, rapidly expanding through the ecosystem, and interesting investors, including Enza Capital, were some of the backers of that business. Now, Kenya raised 4 million in February 2025. And this is another one where we saw a little bit of slowdown activity, though it had the highest growth and was a key recipient of debt in 2024. We did see a little bit of slowdown, especially around the time of the political instability last year. Kenya's startup investment activity slowed after a busy end of 2024. So as I mentioned, 4% this year, led deals by Purple Elephant Ventures in the tourism sector. In February, only a couple of minor funding rounds were noted, including Haki Africa, which raised to expand its funding round. Overall, Kenya's share of continental funding dipped this month, a trend to watch if persists. But given Kenya's usual prominence, we're just thinking, this is a bit of a slow month, especially around the time that, or especially rebounding from the end of December. It seems like the markets are just generally picking back up. Morocco, our golden child, $1 million in VC funding, but you have to understand also Morocco is the smallest country, aside from Ghana, that we are actively looking at as the newest as far as key recipient of venture capital dollars and growth in their market. As you know, or as you may know, so InstaDeep and Expensia are two companies that sold for major exits. InstaDeep was around 600 million it sold for. It was a whole acquisition from a Western country. They have a lot of, they have had a few, excuse me, I'm speaking on Tunisia. Tunisia has had two major acquisitions. So I'm jumping over to Tunisia a bit, and then I'll come back to Morocco. Tunisia has had two major acquisitions in the market, to InstaDeep and Expensia, both in the AI space, both acquisitions from foreign businesses. And we are seeing Tunisia as a key recipient of venture focused on artificial intelligence. And what we anticipate is Morocco to come in the same, especially with the digitization of some of their traditional industries, and including manufacturing, especially with the innovations and the policy reforms being promoted and pushed forth by the royal family and their ingenuity and innovation mentality. Them having, even the royal family themselves having their own venture capital vehicle, having their own incubator and acceleration programs, really focused on perpetuating, and we're talking about Morocco now, really focused on perpetuating, really growing the technology space, making it a key contributor to GDP. We should see some of the same. $1 million in venture funding came in. The investment was in an AI startup. So Toom AI, a Moroccan AI startup focused on multilingual customer service automation, secured $1 million. So it could also be, historically we saw countries that were outsourcing, or that were sort of were for BPO and outsourced services, the Philippines, even a lot of this work and activity in Madagascar. I think the next generation of outsourced customer service will come from the hubs of artificial intelligence, with a small amount of human intervention. And what maybe we've seen iterations, and we've seen a number of Indian startups actually with leveraging AI. So not entirely replacing their workforce, but leveraging AI to at least change their accents, change their language, so that fewer professionals can cater to more customers. Where we likely will see similar trends happening across the continent. Now, Nigeria, the behemoth that's stabilizing. You can expect great things. I'm not biased. 11 million in venture funding came in February 2025 into the financial services sector. Raynest, a Nigerian fintech producing multi-currency accounts and payment solutions for African freelancers and businesses, raised 11 million in Series A, led by QED and Norskin, followed on by Ventures Platforms and SeedStars. Raynest has amassed 700,000 customers across Africa. And this actually touches on a broader point of African. So we have African nationals in the technology space. This is an incredibly growing TAM that we've been thinking through for a long time, of the products and services that cater to this new and exploding TAM of African nationals. So young Africans who are gaining technical expertise and then being employed internationally. So people based on the continent learn tech, get a job somewhere else, and are able to remotely work. So still based on the continent, and able to spend their international currency domestically in Africa and earn foreign comparable wage in Africa. So we, of course, the first iteration of this will be technical training programs and education to cater to this community. It will be tools to help them learn and build. It will be financial products so that they can receive their salaries. It'll be spending tools. It will be what we anticipate next will be more in the healthcare, well-being, lifestyle. So as people continue to build up their discretionary earnings, they're making significantly more than their domestic peers, being able to think about things other than, the average Nigerian who's spending about 70% of income on FMCGs, on food and sort of subsistence spending. So look out for this space. Nigeria saw several smaller deals as well. Agritech startup Relief secured follow-on funding, and SaaS startups closed around $1 million. The other thing that would be interesting to note is the consequence of U.S. aid. So I think we anticipated a major shock in the technology sector. Of course, other sectors saw major impacts. USAID was actually funding a lot of acceleration programs across the continent, a lot of conferences, a lot of government-supported initiatives to promote the technology sector. And fortunately, we have been seeing private sector as well as domestic governments coming in to cover that budget to make sure that those things did not just fall to the wayside. We'll see what happens in South Africa related to healthcare funding and the freeze of total funding from the US government. But again, we are seeing alternative sources of capital come in, fortunately. So $41.8 million was raised in VC funding for February of 2025. And this was mainly, again, in fintech, mobility, and agriculture. Interesting to note, Togo, Gozem, the super app, raised about $30 million in their Series B. In Côte d'Ivoire, we saw Corridor, which raised $3.5 million in seed funding to scale a hybrid cash to digital payment platform. South Africa, we saw Kula raise $6.8 million in Series A to expand its digital marketplace for farms, inputs, and produce. Kula's platform connects small farmers with suppliers and buyers. We see actually a lot of agri-tech companies popping up out of South Africa. Historically, I saw companies that were more competing with the Western world, global from day one. And now it's exciting to see increasing amount of agri-tech companies being built in South Africa. In summary, $118 million invested in February 2025 into 38 startups. And of course, this is not entirely comprehensive. These are deals that have been showcased publicly. There are probably thousands of deals that happen in the angel and the very early pre-seed space that are not publicly announced that will not be included in this. So there's a lot of economic activity. And speaking heuristically, speaking from what we're seeing on ground, deals are absolutely getting done. However, the time to fundraise is still longer. It's not as long as it was 2022, or coming into 2023, that entire slowdown. It's definitely now picking back up, but it's nowhere near where it was in 2021. So hub focus, noteworthy developments from around Africa. So if you all can see this, focusing on the big four markets, Nigeria, Kenya, Egypt, and South Africa, continue to attract the majority of startup capital in February 2025, echoing long-term trends. However, notable funding also flowed into emerging hubs outside of these ecosystems. As we just discussed, Gozem being funded in Togo, Ghana, we saw Affinity being backed, the fintech company that we mentioned. In Egypt, we've seen a number of sizable deals, Kazna, as we discussed in the fintech space, in the Middle East. Also, generally, we're seeing as a broader trend, increasing investment into the artificial intelligence and machine learning sectors at large. And what our bet is at Ingressive Capital, and we can have a discussion again at the end about this, is not that Africa is currently building the most globally advanced artificial intelligence and machine learning solutions. That is not our bet. Our bet is that Africa is best positioned to leverage artificial intelligence and machine learning for our traditional industry problems that we are currently seeing. This includes fraud detection. This includes customer service and outsourcing. There are a number of other sectors that from day one, where we are in our technology development, because we are not, of course, we know we are not where the Western world is, but where we are currently in our internet penetration, in our mobile usage penetration, in the use of internet for day-to-day activities. there are some sectors where it completely makes sense currently to start incorporating AI, and we are seeing some very interesting businesses doing so. And then you have the AI hubs like Tunisia, like increasingly Morocco, where you are seeing businesses that do compete with Western world businesses from day one, and then thus are acquired by Western companies when the time comes. So interesting dichotomy there, and something to definitely keep a lookout for. Separately, getting back into the text, Kenya demonstrated its continued strength is hockey, what we mentioned, the fintech company. And there are a lot of high potential startups in the smaller markets as well. So even for us, we are beginning to look at DRC, Uganda, some of these sort of tier 2 and tier 3 cities as the as the cost of a gigabyte of data continues to decrease, as GDP continues to increase, and as per capita GDP continues to increase and markets generally stabilize. We do believe that the next generation of some of the African unicorns will be based out of, and definitely majorly focused on, many of these tier 2 and tier 3 African cities. Now, major moves. We're very proud of our ally fund, Lofty Inc., that closed $43 million. They have been working at this for some time, and it is so amazing to see they've got over the finish line. They were backed by IFC, Proparco, FMO, and other DFIs. They've done an incredible job of rallying the DFI team. Fawry begins to acquire stakes in 3 Egyptian fintech companies. What I was mentioning as of Moneypoint, Fawry, some of these other players, these major version 1.0, version 2.0 fintechs, even InterSwitch, continuing to acquire assets, invest in assets across the continent. And with this, we are also seeing banks and telcos. Airtel has its venture arm, MTN is actively investing, etc. So we are seeing players across the continent on both sides. Rapid Deploy, acquired by Motorola Solutions, which is South Africa recorded one of its most symbolic tech exits as Rapid Deploy, a Cape Town-founded emergency response tech startup, was acquired by U.S. giant Motorola Solutions. The deal underscores the global impact of African innovation and is hailed as a milestone for the country's VC ecosystem. Ghana's long-forgotten startup bill revived by the new government, promising. So as mentioned, this new government is very pro-business and also pro-tech. And so what we can expect to see from them is a continued push for a business-friendly environment, continued promotion of ease of doing business, and more policies like what we have just seen now in the startup bill. The new administration has set an ambitious deadline for the legislation to be finalized by July 2025, aiming to unlock tax incentives, funding support, and enabling a regulatory framework for entrepreneurs. This policy momentum is expected to enhance investor confidence in the Ghanaian startup scene and could serve as a model for other African governments to foster innovation. Also, the digital bank Revolut is eyeing a South Africa launch. In a sign of Africa's growing allure, Revolut, the $45 billion UK-based neobank, confirmed plans to expand into South Africa. The world's 4th largest digital bank has begun exploring a local launch and even applied for a banking license, a move that could shake up the South African banking sector and intensify competition in digital finance. Revolut's interest underlies the continent's market potential and may spur greater involvement of international tech giants in African fintech space. Now, word about. The overall investor sentiment in African startup ecosystems remains cautiously optimistic as of February 2025. The year kicked off with recording funding momentum. About $408 million was raised in January and February combined, the highest in January to February since 2021, which means good things are happening. We're coming back. Last year, some reports said we had about $3.2 billion in total funding for 2024. Others said we had about 3.7. This year, we are already positioned to beat those numbers. So we're coming back. And this is roughly 3.5x the amount on the same period in the year prior, putting 2025 at a pace to surpass 2024's total startup funding. Investors are clearly keen on Africa's growth story, but they have also become more selective and disciplined in the face of global economic headwinds. So for entrepreneurs, what this means, and we've already been talking about this for some time, not a whole lot changes. Just focus on your new unit economics. Make sure the financials of your business make sense from day one. If you have incredible growth, but you are bleeding cash and you are also bleeding users, it's not going to be an interesting business that raises venture capital. We want sustainable metrics. We want to see really high and really strong retention. People continue to use your product month on month. Your CAC, your customer acquisition costs, are lower relative to the lifetime value. We want to see practical, sustainable metrics. It is not about growth. And this has been something that is not news. It's been coming since 2022. So just keep this in mind. We'll go into it later. Macroeconomic factors continue to influence the outlook. High global interest rates and a strong US dollar have tightened financial conditions, contributing to more cautious investor behavior. Many African economies are still navigating inflation, currency fluctuations, and post-pandemic recovery, but there are positive signs on the horizon. Policy reforms and support programs are expected to improve the business climate, and potential monetary easing in developed markets later in the year could relieve some pressure and capital flows. In the sectoral front, fintech remains the linchpin of African VC activity, a trend reinforced by the fact that the majority of the largest deals so far in 2025 have been fintech or related fields like online payments and neobanking. There is also a continued investor appetite for startup tackling infrastructure gaps, from logistics and mobility platforms to clean energy providers. Notably, February saw major renewable energy financing in South Africa and ongoing interest in AI-driven solutions. For instance, fintech upstarts leveraging AI for credit. Fintech upstarts leveraging AI for credit scoring and risk analysis. These emerging themes, such as climate tech and applied AI, are gaining traction alongside the traditional favorites, hinting at what could be defined as the ecosystem's trajectory for 2025. So watch this space, climate tech and AI. And we had a call with our limited partners last week. And as the US removes DEI, all ESG, all environmental policy, EU doubles down. So what we anticipate and what we discussed and what we anticipate may likely happen in the year to come is that it becomes this extreme dichotomy. There are the investors who are very, very focused on ESG, on climate tech, on anything to do with making the environment and the populations better and healthier. And then you will see those that are strictly focused on financial returns and sort of supporting what is now the American ethos. Overall, despite global uncertainties, African startups ecosystem exudes a resilient optimism, bolstered by its young demographic, expanding internet access, and the sheer scale of unmet needs ripe for innovation. So team expeditions, internal venture scouting, and corporate growth through events and visits. So our femtech platform, Mother Being, secures $200,000 in venture funding. Start Button expands to 7 Francophone African countries. Watch that company. Carry First, one of our incredibly high top performers, is listed as Forbes 50 or top 50 fintech companies, and Jose gets Visa and DEG backing. And as far as additional companies, we are very excited on what to announce coming soon when it comes to Complete Farmer and Renda, as well as Gray Technologies. Tizedi, one of our Fund 1 companies, is positioned to list on the Nigerian Stock Exchange this year. There have been some articles floating around about it. Watch this space. We will begin to see domestic IPOs, and there have even been talks of Flutterwave doing the same. Now, curtains close. In conclusion, there's a clear sense of renewed optimism among venture investors in Africa. The strong start to 2025, with the African funding up by 240% year on year from January and a more robust February, suggests that many investors who paused in 2023 are back to market. Global venture trends also show signs of recovery, and Africa, with its growth story, is benefiting. Fintech remains a magnet, but investors are increasingly looking for differentiation. Sectors addressing African fundamental needs, including financing, energy, agriculture, and healthcare, with tech-enabled models, are in favor. Furthermore, large global investors like QED, Standard Chartered, are actively participating, bringing not just capital, but also validation to our ecosystems. Heading into March and Q2 2025, we are expecting African investment momentum to continue. Key things to watch for include the impact of any interest rate change. A Nigerian rate cut could be on the cards. The performance of mega deals, as we discussed at GOZEM, that 30 million in Togo, big rounds in Francophone Africa, and the pace of exits, as well as domestic exits. Specifically, let's look out for Nigeria and Egypt. Interesting things may be to come this year. Additionally, any major geopolitical events or global market swings could alter risk appetite. For now, however, the trajectory is positive. Africa's venture ecosystem in 2025 is on track for a strong rebound, with diversification in deal geography and sectors that bode well for the continent's innovation-driven growth. Thank you so much for participating in our February 2025 monthly market trends reports. I am happy to answer any questions that anyone here may have. I believe, Bola, you have to be the intermediary here. So what are the outlook for healthcare or health tech sector in Nigeria? Well, we have seen an uptick in the amount of overall funding, which included the healthcare space. I would say with the potential decline of interest rates, there may be more debt capital available. However, with what has happened with USAID pulling all of their global funding, I do anticipate that investors as well as government initiatives are now looking how to fill those spaces. I don't have a conclusion here, but I would pay attention to government initiatives and I would pay attention to USAID alternatives, ones that are actually literally positioned as USA alternatives, given what's happened. We've seen a number of sovereign funds, of federal or of foundation efforts that have been positioning themselves as you can come here if you've lost your funding due to USAID and you're specifically within the healthcare space, you can come to us. So I'd spend some time Googling what those initiatives may be. Is there technology breakthroughs you've been exposed to outside of AI that can accelerate Africa's adoption of the AFCTA, AFCTA, or is AI the natural evolution for all technology markets? So I'm going to generally understand that question to be, what is helping Africa promote Pan-African trade? Because really the purpose of the AFCTA, ACFTA, the AFCTA, tongue twister. The whole promotion of that and the whole purpose of that is to promote Pan-African trade and increase the ease of doing business across the continent. And so we have companies in our portfolio. I see both a public sector and a private sector initiative on both fronts. I don't necessarily think that AI will be the promotion of what helps African countries work best together in the short term. I think we're seeing a lot of pioneering movements with PAPS. Sort of the push to make the movement of capital, of financial services and financial technology within the continent, not having to engage foreign banks for Pan-African transactions. I also think in the short term, companies like StartButton will certainly promote Pan-African trade. We will see like companies, if you've heard of Noorbase as well, that facilitate the ease of doing business, like launching in a new market, ensuring that you're complying with the regulations, et cetera. And what we're seeing as these big behemoths, like the Money Points, the Fauris, even the banks and telcos that I mentioned that are expanding across the that are acquiring assets across the continent, and investing across the continent, investing across the continent. The benefit about this, as well as just promoting increased liquidity, is that these guys already have their licenses and regulation. And so by receiving investment from either a traditional industry player who has these regulatory licenses or a more established fintech, one of these unicorns that has the budget and already has the licenses and also likely has teams that focus on implementation, is if you receive funding from these guys, you'll definitely be better positioned to move faster and expand more rapidly while spending less. So both will have the private sector like Startbutton and Norbase that I've mentioned, will have the bigger guys through strategic investment and acquisition to assist. And likely we will continue to see innovations, whether it comes from the trade financing side, from bringing clarity for Pan-African marketplaces. I've seen a number of businesses, even recently, Zebra was one of them, Mata is another one, that is essentially just bringing transparency to the marketplace to help promote trade across the continent. Next question. In connection with what you've shared, how is USA's policy currently affecting the investment and market appetite for African startups, EU versus Middle East versus Asia? I mean, just along all that I've shared, I don't have much further, but just to sort of recap on what I shared during the presentation is before in all global investors were saying America, the dollar's always been really strong, the market's always been really stable, and with interest rates rising, that means yield, so the money that you can get back for investing in fixed assets, which are seen as more or less risky, more risk averse, or for investors who are more risk averse. It's like a portfolio diversification into less risky space. You're investing in something that's less risky, and your returns for it are increasing. So we saw over the last few years a big push towards fixed equities, and then also playing in the public markets, which especially at the beginning of the Trump administration and last year had increased and even rallied when Trump came into office. So we saw some push, some increased movement into the public equities, continued stabilization in fixed assets. But now we're seeing, as investors are scared about what's going to happen with geopolitics, a lot of them moving into gold and different assets, and then also looking back into private sector and also looking into moving increasingly into African markets. As US becomes less stable, the money has to go somewhere else. And Africa is one of those key recipients. And then to answer your question on the Middle East and Asia. So of course, we've been seeing the One Belt, One Road. I believe Asia is financing, it was 30% of all African ports or has some element of ownership. So that's pretty extreme. We see we see Asia moving down the east side of Africa and increasingly coming in Nigeria, even, speaking on the day-to-day, the number of Chinese nationals that have come to be engaging in the technology and mining space, I'm seeing even on the day-to-day in Nigeria, has rapidly increased and radically increased even over the last year. Middle East, as far as they're beginning to look at Africa from an investment perspective. But I'd say we're still very much in the beginning of seeing the Middle East engagement with Africa, except for Egypt and increasingly Morocco. So I think those two places, strong relationship historically, in Egypt specifically with Saudi, with UAE at large. There will be a lot of trepidation and things will move slowly for the Middle East to expand into other parts of Africa. But Asia, you can expect to remain strong. Russia, increasingly strong. And I'm not actually sure what the US is planning to do. And I believe the EU will double down on its commitments to the continent. Which sectors are you more excited about? So what I talked about during the presentation of this growing TAM meaning total addressable market, this growing demographic, I'll say, of African nationals, so people living on the continent but being employed globally and working in the technology sector. So our African remote workforce, I think young remote workers earning in foreign currencies based on the continent is an incredibly fast growing space, and they have a lot of disposable income. So we are going to be seeing finally not just subsistence tech being the most relevant on the continent. I think that there are very interesting things to come over the next year. Taking some questions from YouTube that will be displayed on the screen. What's my outlook on job tech? I assume that means HR tech. So we've seen a number, Jobberman, we've seen a number of companies like that across the continent. I'm less convinced still about the HR or like the hiring side of job tech, which means leveraging technology to source for applications and put people in jobs. I think AI can definitely help with that, especially the initial screening process, but it's still a manual thing. People hire people that they feel good about hiring them. I don't think that whole process can be digitized and outsourced. However, companies like Go1, which was the partly South African unicorn that focused on training, especially in-house employee training technology. I do think that there is definitely a market for that, and we're seeing growth, especially as workforces need to begin adopting additional skills, specifically understanding of and engagement in the artificial intelligence sector, machine learning sector, a generally broader understanding of technology at large. And we're seeing this reflected also in the budgets of telecommunications companies, of banking, of insurance companies, where they're allocating a meaningful portion of their budget to sort of digital transformation and innovation. And that means also upskilling their workforce. So I think there will be interesting solutions in the upskilling space, less in the job placement space. What is the status of tech relating to basic needs, agriculture, electric grid? Yeah, I think that basic technology, which means just you have to see tech doing multiple things. What I think that we are in what we are very boldly active in right now is tech to bring transparency and ease transactions. I think tech that promotes marketplaces, that promotes marketplace transparency, like brings transparency to buyers and sellers, which generally like that's e-commerce, marketplace at large. And I think things that that facilitate transaction, which can also be the bringing transparency to the marketplace, to the buyers and sellers, but it's mostly around the actual process of the transaction. I think those have been major industries, and also we've seen the reflection in the Indian and initial developments of the Chinese market, with these sectors being the first to really pick up steam. So I think that's where we are now. As far as the agriculture sector, yeah, I think there's still some in East Africa. I think there is still opportunity for logistics plays, for marketplace plays, for financing plays, for import-export logistics plays. In West Africa, it's more of an infrastructural play. So like I'm looking for technology solutions in the agricultural space. Of course, commodity trading's platform. I think that's really interesting. But I think solutions more looking at Zipline. So we've seen Zipline expanded to another, I think they're in like 30 countries in Nigeria alone. The need to build, because we're not going to invest in a startup that's going to build roads across Africa so that it can make a logistics and infrastructure play. That doesn't make any sense. And the government's not solving that problem right now. So how can you build technology that usurps, that skirts, that skips the need for stable infrastructure and developed infrastructure, and even develop like that technology that works and innovates past the issues that we have as far as the infrastructural issues that we have in West Africa. And so those are things that are more interesting to me. So like Zipline type solutions that they don't even have to use the road infrastructure. They're using the sky. Cold chain storage. So acknowledging, okay, it's going to take a really long time for goods to get to market. How can we protect the goods? Storage facilities, warehousing, as long as the margins make sense. So companies like Renda, one of our portfolio assets. And I'm still continuously bullish on import-export logistics. I don't think that we've solved it. I think that the process of moving goods and services in and out of the country is really challenging. What sectors does Ingressive invest in? If someone is building an ed tech startup, should they reach out? Yes, they absolutely should reach out. Our key sectors are on our website. We mainly look at financial services, marketplace, which means anything that strengthens an African currency by promoting exports or Pan-African trade, or well-being. So that's like healthcare and wellness generally. But yes, we absolutely do look at education, just a little bit less than the other sectors. But by all means, share your deck. And also our website shows you all of the companies that we have historically invested in, our average ticket size, the sectors where we're looking, and the countries where we're looking. So if you go to www.ingressivecapital.com or ingressive.vc, you can see all this information there. How can we come in as an LP to Ingressive Capital? You can send me an email, or you can reach out on the website, or you can reach out on LinkedIn, Maya Horgan Famudu on LinkedIn. I'm happy to chat more about Ingressive Capital. We are not currently raising, but we are developing relationships with limited partners, anticipating our next raise. Are marketplaces still exciting to investors? Yeah, absolutely. It's one of our key sectors of investment. And that's as marketplaces, it's generally a business model. More specifically, what I'm talking about within marketplaces are platforms, again, that help promote Pan-African trade or facilitate the movements of goods and services and bring transparency to connecting the buyers and sellers. Is there a relationship between all parts of the African economy, Maghreb, West Africa, or specifically between Anglophones and the other speaking language Africans? Is there a relationship between all parts of the African economy? I'd say PAPS is working on that, and the African Free Trade Agreement, that AFCFTA and Afreximbank is really sort of trying to build the web. I'd say once again, companies like Noorbase and in our portfolio Start Button are really very much promoting that Pan-African trade, but there's definitely opportunities for innovation in that space. Has Ingressive dug further into the gaming space in Africa with the investment in Carry First? Curious on Ingressive's take of that industry and the potential for Africa. So what we saw with Carry First and with we've done 2 gaming investments on the continent. One did not work out, and then one was Carry First, which is incredibly successful, and we're really excited about. Backed by Andreessen Horowitz, great. Who else is back then? Google, Sony, Bitcraft, etc. So Carry First has just taken off. We are definitely still looking at this space, but our conviction is not currently around Africa as the game creator. However, we are willing to look at different opportunities. If you have extremely low megabytes, the ability to rapidly produce games that have high retention and low churn, even after 30, 45, 60 days, I'd love to see it. And I'd say what's most practical right now are betting solutions. And we don't typically look at betting, but I would say what we still have strong conviction around becoming a $1 billion business on the continent are Pan-African betting solutions or some sort of like game skills-based betting. As well as there's something around that we haven't cracked yet, but there's something around the sort of like influencer and like exportation of culture within the gaming space from the continent. So willing to look at those sort of innovations. But if you have something that we haven't seen before and you have strong retention, you have month over month, you have growing users. You don't have to have, tens of thousands, millions, but, people are using your product. They think it's really interesting. It's growing fast. It's like, anywhere 10 to 50+% month over month growth. I want to see it. Even if you're in the beginning phases, you're in months 0 through 6 of starting your business, we can still invest. So though it may not be our key area of focus, it's definitely something that we're still looking at. Just send us your tech-enabled businesses. Considering some of the startups raising, okay, so I'll go for 2 more minutes. Considering some of the startups raising capital to provide tech talent to the West, what is your view on job tech for both local economies and for export? So I think I went over that more or less. It seems only in Africa does the USAID play a major influence in VC's decision to back health tech startups, whereas this isn't a factor in the US or European health tech startups. Why the difference? Because the US actually invests, or in Western nations actually invest in their own domestic healthcare, and Africa really doesn't, and historically hasn't needed to because it's been backed by, or it's been, supplemented with things like USAID. So that's at least on my perspective. I'm not an expert in health tech businesses. But just from what I have seen broadly, that would be my feedback. And it's still nascent as far as it as being a key recipient of venture capital dollars. If it was like the fintech sector, where it was like the major recipient of VC dollars, and then the other thing about healthcare is it generally requires a lot of funding. So whether you're talking about biotech or drug discovery or pharmaceutical, et cetera, requires a lot of funding. If you're talking about, telemedicine, I don't have as much strong conviction in that space, but if you're talking about wellness solutions, therapy, et cetera, things that can be 100% digitized and are lower as far as the amount of funding that they need, that's a tech company. Hope that answered your question. I mentioned the rise of private credit. Which sectors do you feel will be impacted the most? I think financial services will be benefited, like debt, like raising debt, and also traditional industry, so infrastructure. But raising, I think this is something more of like benefiting the private equity space and a little bit in the financial services. Given the low insurance penetration across Africa versus global market, do you think investing in insurtech disruptors presents a solid investment opportunity? So this goes into, you don't want to have to be the one to build the infrastructure for your business to work. And you also don't want to be the one to have to educate your consumer to get them to use the product. What I mean by that is, with insurtech, it's not necessarily a good thing that there's such low insurance penetration across the continent, because that means you need to educate the consumer, or the consumer does not have enough disposable income or discretionary earning to be able to invest in something they see as a luxury item like insurance. So the way that we are looking at it is companies, either like B to B to C companies. So typically, like those generally across the continent, I'm speaking more broadly because this differs by country, but you'll see those that actually do, where there are high rates of insurance penetration, it's typically that the company is providing it. So it's big corporates, publicly listed companies, and that's not a whole lot of people. So that's what I mean from B to B to C. And as we see an increase in insurance coverage and increased competition over employees, so like high skilled workers, especially with this growth in the technology sector, as like technical skills across the continent that I was mentioning before, I think we will see an increase in insurance penetration coming from the B to B. So as businesses allocating it as opposed to individuals going out. But we are also seeing micro insurance picking up across the continent. So I think insurance is an interesting space. I think going into an extremely like single digit low insurance, like markets with extremely single digit low insurance penetration, where you have to educate the consumer, is not a wise bet. I would focus on markets where there are at least meaningful amounts of insurance usage across the private sector, and not just through business allocation, as in like businesses granting insurance to the users, like individual users going out and booking it themselves. Don't try to be the one who's like teaching a consumer how and why they should be using a product. Okay, we're done. That is the chance. What is the chance of my startup raising capital from Ingressive Capital? Apply on the website. Everyone, feel free to ask your additional questions. Go to www.ingressivecapital.com now, or www.ingressive.vc, and apply. There's a sector you can literally apply right there. Everyone's application will be seeing. All the startups can apply. Just make sure that you have a product. Don't come to me with an idea that you're talking about and you've been thinking about for years at a time. We're not going to invest in it. Have a product. You don't have to have a lot of traction. You don't have to be super far in your business. Just have something that is growing and that people are using, that you're testing out. And also asking questions. We are on X. We are on YouTube, as you're seeing. We are on Instagram. We are on LinkedIn. Send me a DM on LinkedIn. It will get answered. We just made a new hire in our social media team, which means that we will be able to get to all of the questions and all of the DMs. So by all means, send me your inquiries. And I know that there are some questions that I'm not going to be able to answer. The last one I'll get to is, we invest in pre-seed and seed stage technology companies. We're in Nigeria, Kenya, Ghana, Egypt, Morocco. However, we are, as I mentioned, starting to look at tier 2 cities: Uganda, DRC, Cote d'Ivoire, Senegal, even Tanzania, Rwanda, Tunisia. We're starting to look at tier 2 African cities. Send us your deck. If you're somewhere, we also look at South Africa. And then as far as sectors, just be tech enabled. Apply on the website. We'll take a look. If you're innovative in a sector that we've never even talked about before, but you're building something incredible, apply. And we invest generally up to 500,000. So we target companies that are valued at 5 million post money or below, and we target 10% ownership. So that is everything. Thank you guys so much for joining me today. I look forward to future months. If there are topics that we missed out on that you want covered, by all means, send a DM, leave a message. This is really so it can be helpful for you, because we found people want to know what's happening in the ecosystem and how it impacts their business. So if there are guests that you want to see me do this with in the future, cough, cough, Dr. Ola Brown, by all means, feel free to ask. And yeah, leave me your questions that I should answer next time or additional information that you'd like shared. Thank you so much, everyone. Have a great rest of your day. And I look forward to staying in touch with you in my DMs as well as on the chats. Bye.